As you all know and have registered, I really appreciate you taking the time out of your busy days to hear what we're going to talk about. As the title suggests, we're going to be talking about the CARES Act, specifically two of the SBA programs under the CARES Act. So that would be the Paycheck Protection Program, or PPP as I'll refer to it, and the other is the Economic Injury Disaster Loan Program, or EIDL as I'll refer to it. Now, I know a number of you come from different backgrounds. We have attorneys, accountants, some borrowers. We have some people in the lending industry as part of this webinar. So we'll try to find content that will really help you have valuable take-home points to apply practically related to these two things. I also know a lot of you have questions, really important pressing questions. Some of the big questions that I know you do have are, is it acceptable to wear your day pajamas for another hour? Is it okay to have another snack and it's only 12 o'clock at the time of day? Or how on earth, like me, do you deal with kids running havoc in your house? Those are important questions, but we will not be addressing those either, Kelly or anyone else participating as part of this webinar. What we are going to deal with are the questions and the confusion that has really come about as a result of three things. We've had multiple press conferences that have been held by the President, the Task Force, the Treasury, and SBA. So we've been watching a lot of that and following that news. At the same time, you've had this unprecedented act rolled out in a very short amount of time. And then you've got guidance that's had to come out from the SBA, which has had to clarify things. So between these three, between lawyers writing something that makes no sense to a lot of people and confuses people, a lot of questions and a lot of confusion. So like I said, I hope that by the end of this, you'll have some of key take-home points that will help you understand and get through the noise there. So we'll talk briefly about the CARES Act as an overview. Then I'll go into EIDL and PPP. And when we address these parts, I'm going to kind of go back in time a little and we'll address them from the perspective of as the Act was written. So we'll look at it through that lens, knowing, of course, that there has been subsequent clarification on what the Act meant or was intended. There's been Treasury guidance. And so we'll deal with that in part 4, which is the confusion, and then they'll take home points. So whilst I anticipate we'll obviously take questions during this time, please note that some of your questions are going to be answered later on anyway. So try to be patient where possible. So what is the CARES Act? Well, it's the short form of that long name, the Coronavirus Aid, Relief and Economic Security Act. That's the CARES Act, and it's the unprecedented $2 trillion package that was released to help really inject money and stimulate the economy during this national crisis, or really the global crisis, targeted to help individuals and businesses survive through this time. Briefly, the summary of these two programs, just some highlights that are worth noting. We've got the EIDL program, which is essentially a 30-year loan at a 3.75% interest rate. It's intended to provide working capital, so it's a broader use of that money. There is, of course, that $10,000 emergency advance that everyone's been very interested in knowing more about. Payments are going to be deferred for 6 months, so that's another benefit. And this is a program that you would apply for directly with the SBA online through that link. On the other hand, and in contrast, the Paycheck Protection Program, so PPP, very different terms. It's only a 1% loan, 2-year plan, payable within 2 years, but it has the unique feature, as many of you know by now, that could be entirely forgiven. Again, like EIDL, first payments will be deferred for 6 months. Added benefits, there are no guarantees, there are no fees, and there is self-certification as part of the application. However, this, which is also an SBA program, as you should know by now, is not something you apply for directly through the SBA. You instead will do it through an approved lender or an approved agent. And so there's a big list there. Whilst we're going to focus on PPP and EIDL, it is important to know that there are other stimulus packages available in the CARES Act, such as these checks that we've heard a lot about, that you will be getting direct through your mail or in direct deposit. There's access to your IRA without any penalties. So there are a number of other tax benefits and options that you can take advantage of under the CARES Act. But again, these are things we're not going to discuss as part of this. One tip I will give you though, as it relates to the check that people are hoping to get if they qualify and meet the income levels, if you're not already registered with IRS to receive a direct deposit for your payment, go to irs.gov, because they've set up a very simple toolkit for you to add in your information. Then you don't have to wait for the checks. You know, IRS is notorious with taking their time giving us money back, very quick to take it. So go on, register, put your info in there, and then what we can do is you'll find that it'll be much quicker to get those checks and those payments. Moving on, so EIDL. Again, just recapping the overview here. As I said, you apply directly through the SBA, through the link there, and that's a program that's been available prior to the Act. It was a very simple application process. And we should clarify something here. EIDL, or these economic disaster loans, have been available through SBA for a very long time. It is just that they've typically been localized when there's been a state or a town hit by a tornado or hurricane or other natural disasters. And in that time, these sorts of loans, these disaster loans, were maxed out at $1 million. So what the Act did is increase that amount to $2 million. So that's the maximum amount. Again, interest rates, 3.75%. But for a non-profit, it's reduced to 2.75%. So they're trying to make it attractive and open it up for more businesses to apply for these sorts of loans. The repayments, I mentioned, and we know that payments are deferred by 6 months, but here's a point where people have been confused, and it's important to address this. Whilst the repayment, your first payment, would be deferred, interest is going to accrue from the time the loan is originated. So by the time you get your first payment, interest would have already accrued on the amount you owe, and it will spread through the term. So just be wary of that as well. Furthermore, the use of proceeds, as I mentioned, EIDL, unlike PPP, is really designed to help companies with their operational needs. You've suffered an economic injury, so the use of the money, if you get the loan, the use of the money is a lot broader. It can cover rent, mortgage payments, salaries, paid leave, and other operational needs. So much broader use. Also, because it is a loan, and unlike PPP, there is no forgiveness on this. We're not really dealing with the back-end complexity on how do you use the money, calculations to hopefully get forgiven. Again, because this is a loan program, if you take a loan more than $200,000, you are going to be required to give a personal guarantee. At the same time, if you take a loan for over $25,000, you are going to be requested to pledge some sort of collateral. Now, it doesn't necessarily mean that's immediately real estate, but you will have to give some collateral, and you'll work with the SBA as part of that process. I'm careful how I use this next term, the EIDL advance. This is that $10,000 that everyone's been hoping to get, and you're supposed to receive it within 3 days, as we were promised in these press conferences, of submission of your application. But as we all know and have experienced, I don't think anyone's received that $10,000 advance. And you have to understand the system has been hugely overwhelmed here, because a typical disaster loan through SBA, for them to release funds, is anywhere from 4 to 7 weeks. And that's when they have only a few thousand applications in the year. Here, we've had millions of applications, Payments within 3 days are never going to happen. It's going to take some time. So just be wary of that. So I referred to the eligibility. A substantial economic injury. A business has to really demonstrate that they're unable to meet their financial obligations, pay their operating expenses, or they've had a reduction in working capital. So that's what it means to have suffered substantial economic injury. In terms of the sorts of businesses, most people have referred to this as, well, if I've got less than 500, I'll fall under the guidance, which is true. You'll look at the SBA size standard. So less than 500 employees as a small business, private non-profit organizations, also available to individuals, sole proprietors, and independent contractors. So you are also eligible to apply for these EIDL loans. However, and the Act does list out a number of conditions where someone would not be eligible. So if you've been a business that's had a disaster loan before and you've not complied with those terms, if you've committed certain crimes, there are other instances where you wouldn't be eligible for an application under EIDL. Episode 1, the EIDL Advance. It's like a Star Wars Episode 1 here. I've taken the direct language from the Act here. As I said, it's supposed to be within 3 days, but it's looking more like 2 weeks before people will start to even receive this money. But an applicant is not going to be required to repay this advance, even if denied under the Section 7B. So this $10,000 advance, the way the Act is written, in this context, in isolation, would make people feel and believe that the $10,000, if you get denied for your loan, you wouldn't have to pay that back. We'll address this a little later on, again, as part of the clarifying of the confusion, but this is something here. Furthermore, if you apply for EIDL and you get that $10,000 advance, and you separately apply under PPP, because you can apply for both of the programs, then your loan forgiveness portion under PPP is going to be reduced by the amount of the $10,000 advance. Application requirements, you'll fill the application online. It is a very simple application. It takes about 5 minutes to fill in. There's a form you will fill in. You may be required, once you get the feedback, to provide subsequent supporting information. So be prepared to have your documents ready to show your need for it. And at the end of the application, it's about 3 slides. There's a checkbox for you to select to request the advance. So make sure you check that box. It will then ask for your bank account information, where you'd like the money to be deposited. So that's the application requirements as it relates to the program. Just try to give you a brief example of different types of loan amounts, what that looks like on a 30-year basis, whether it's a $25,000, $50,000 or $100,000 loan, what monthly payments could look like. So Kelly, I think you may have already, I can see we've had a lot of questions already pop up.
Yeah, so there's a lot of questions. We actually have a few of the same questions. A lot of people are asking if they can apply for both.
Yes, as I mentioned, you can apply for both the EIDL loan as well as the PPP loan. However, you cannot use them for exactly the same purposes, because what it will do is it affect your forgiveness portion as it relates to the PPP.
I think we have time to take one more question. Yeah, so this question is, will lenders be prevented from requiring an existing loan relationship with an applicant before accepting a PPP loan application, as Bank of America and Chase banks are now requiring?
Yeah, that's a good question. I think the question came from Greg there. It's a good question. It's something we've seen a lot of. You see, the guidance and the Act doesn't say that. In fact, you know, the big intent behind this is they need to expeditiously roll out these loans, right? But banks, despite the fact that they're guaranteed by the government, by SBA. Really, the bank is not on the hook here. Still, we're seeing a lot of banks wanting pre-existing relationships, even potentially pre-existing credit lines. So that's really going to be a bank thing. There are a few banks out there, certainly a lot more of the smaller regional banks and community banks, that are taking non-existing clients. So it will require a bit of shopping around, unfortunately. But you're doing that racing against the clock as well. There was one other question which I'm going to address it, but we'll deal with it later, that I saw, which is what happens if you apply for EIDL, you apply for PPP, can you opt to take one and turn down the other? You certainly could, but at the same time, it may affect, is this $10,000 really forgivable because you've now really decided just to take money, but then still proceed on other aspects. So we'll get into that a little later. So I'm going to try and deal with the technical issue here and get rid of the Q&A, which is blocking the screen at the moment. And there we are. My partners always make fun of my technological capabilities. So let's go to PPP now. Again, who's eligible? Very similar to the EIDL program. However, you need to have been in operation before February 15th of this year. You have to have been in operation before then. As long as you're a small business, less than 500 employees, so non-profits, veteran organizations, tribal business concerns have also been permitted to apply under PPP, as well as, again, there's your sole proprietors, your independent contractors, your eligible self-employed individuals. And for these 3.3, the application process started today. So April 3rd was for businesses with employees. April 10th was supposed to be the rollout for sole props, independent contractors, and self-employed. There have also been affiliation rule waivers. This is extremely important. Hotels, for example, have multiple locations and will have more than 500 employees. So there's been an exemption for them, as long as they have this NAICS code, and as long as each physical location doesn't have more than 500 employees, then the SBA and the guidance has waived this $500 person requirement overall as a business, as long as each location is less than 500 businesses. This is also important for a lot of clients that we deal with, venture capital firms, because a lot of startup businesses are backed by venture capital. And if venture capital owns about 50, 60 businesses, there's potential of them all being affiliated businesses. So it could be a real problem. SBA has been releasing guidance about this to make sure if the venture capital or private equity firm doesn't have complete control and block your ability as a startup to run your day-to-day operations, then you wouldn't be excluded. So affiliation is something you should certainly discuss with an attorney in more detail. And then for other businesses that we see, if you're operating as a franchise and you've been assigned an identifier code, you'd also be eligible here. Now we'll start to get into some of the fun of this, where people have been pulling their hair, or like me, losing their hair over how much can you apply for. You can apply for the lesser of, under the Act, as it was written, $10 million or 2.5 times your average monthly payroll cost. So where did you get your payroll cost from? What period do you use? If it would depend on when the business was operating. So if you were in operation during the period of February 15, 2019 and June 30th, 2019, then you were supposed to, according to the Act, use that as your period to calculate your average payroll. If you weren't in operation then you would use the period of January 1st of this year to February 29th of this year. So these were the periods that people needed to use under the Act. And we then started again the definition of, well, how do you determine what payroll costs are? So most people immediately understand payroll means your employees' salary, wage, commissions, tips, similar compensation. Confusion around that we'll address. Payment for vacation and sick leave, Healthcare benefits, group healthcare benefits, we've had that also included as part of payroll costs, and payment of state or local taxes assessed on compensation of employees. So the first portion, AA to GG, made sense to people for the most part. And then this threw everyone off. It said, and I underlined points that your brain, you're automatically kind of triggered to read, and the sum of payments to independent contractors. And this threw everyone into a whirlwind, because I understand as a business that has employees, I could pay them. Was this paragraph saying, oh, I could also add my payments to my 1099 contractors? Initial quick glance, that's what people thought. But if you read it carefully, it says income compensation to or income of. So this is really the calculation or speaking to defining payroll costs for the payers, like the sole props and the independent contractors, not the people that are paying to them. So it does not include, and we'll again get to that later. So that's what payroll costs included. What did it exclude? Well, what it excluded was, again, I've highlighted points where we saw some confusion, and we'll get into the clarity down the line. Compensation in AA of an individual who's making more than 100,000. Again, people thought, oh, does that mean if I am a business and have an employee that's paid more than 100,000, I can't even include them in my calculation? No, reading of this, again, carefully shows that it just means that person's salary will be capped at 100,000. The taxes in the federal period, this was confusing and didn't really make sense, because it talks about a covered period and not being able to use taxes that you're paying, but as an employer, and this is the Paycheck Protection Program, as an employer, I pay an employee, I'm also required to pay a load of taxes as well. That's part of my gross cost, but I'm now being prevented from using that as part of my global computation of payroll costs. So there has been clarification around what is or is not excluded as it relates to payroll taxes. It was certainly confusing, because we know that for determining what your payroll cost is, SBA has told banks maybe rely on the 2019 figure, but then this excludes payroll taxes from 2020. So there was a bit of disjointedness there in those things. So we know what you can apply for as a max and what the calculation is based on. It's really based on payroll costs. But what can you use the money for? A much broader variety. You can use, as identified on this slide here, payroll, health benefits, commissions, interest on mortgage obligations, rents, utilities, interest on other obligations before Feb 15th of this year. So a much broader use of what those funds can be. Here's a good tip. If you are successful in applying for PPP and you get your money, I would strongly urge you, put that money in a separate bank account so you can accurately track it and show afterwards that you really did spend it on the things that you were permitted to spend it on. So I think that's going to be very important for you to look at. The next is the loan forgiveness portion. Again, it identifies what can it be forgiven on. Well, it's payroll costs that it will be forgiven for under the Act. Interest on mortgage, rent and utility payments. So more limited use to what it would be forgiven on, these 4 items as identified there. And they must have been things that were incurred during the 8-week period. So when you get the money to apply to get forgiveness, you've got to use it on these 4 things within the 8 weeks. And also remember that if you don't have documentation, you will not be forgiven. So that's going to be very important. Now, there are limits on the loan forgiveness. The forgiveness is going to be limited to, it cannot exceed principal. There are reductions. This is intended to make businesses keep people employed. So if you reduce your payroll because of what's happening, if you reduce the number of full-time employees, then you are going to see reductions based on that. But then at the same time, there's like a good faith saving grace clause where you will, if you rehire these people, during the covered period. If you rehire them, then you will be able to get credit for that. So your reduction will then kind of be offset by the fact that you rehired people. So you may need to rehire, borrowers may need to rehire people that have been previously laid off, and they need to do that or make up these wage reductions by June 30th. Here are an example of calculations for these two programs where there is a reduction. So you've got the forgiveness you could be eligible for, and then you've got to look at how many employees you had, and at the business's option, you can either decide if it's as compared to how many employees you had between Feb 15, 2019 and June 30th, or how many employees you had between January and Feb 29th of this year. So this will help a lender to figure out how many people you have. So that's important to know, and I can address that later on in the Q&A at the end of this. A tax point on loan forgiveness, this is really interesting. Any amount that's forgiven is going to be excluded from your gross income when it comes to taxes. But, and I've been speaking to some tax experts about this, interesting, whilst it's excluded from your gross income, there's a chance that the salaries you still paid using that forgiven money could be used as deductible expenses. So this is a very unique and obscure thing that's come as a result of it. From a hypothetical perspective, when I talked about reductions, here we have an example where a business, in this instance, so I'm now giving an example practically or hypothetically speaking on how reduction works. So Joe's shop, your client, 30 staff, annual payroll, average monthly pay 83,000. Max he can apply for 2.5 times. So $200,000 loan, 208,000, and he gets that loan. What does he do? He has to let go of a lot of people because of the crises. And now his payroll, so he's kept 10 people, so he's got rid of 20. He's got a max payroll of $500,000. Now, this is his revised payroll. So he calculates, well, what am I going to spend during my 8-week period? He figures his rent is this amount. And so his overall cost, he sees, oh, I've only done 131,000 that I've actually spent my money on for allowable uses according to the Act. Again, we're still looking at this through the lens of the Act. The Act didn't tell you how much percentage needed to be spent on those various 4 items. So my scenario happened to be only 58%. 2 weeks into shutting his business down, Joe decides, I need to hire more people because I've got this loan amount. And the cost of hiring those additional people is 30,000 people for the rest of the 6 weeks. These numbers are just made up numbers here for our example. So let's look at it. He got a loan max, which he was eligible for, 200,000, but his allowable use was only 160,000, 130 what he figured he would spend. He spent some more because he hired more people during the 8-week period, so 160,000. This shows that his forgiveness amount now, which would be 160, could potentially be reduced because, and this is something I would speak to a CPA about to really understand the calculation. 160,000, as I said, is the agreed use that he spent it on. 18 is the number of employees he has during the 8-week period, so he's reduced, but 30 was what he had from the prior period. So his forgiveness amount all of a sudden drops down to about 100 grand. Equally, if there was a reduction in salaries, then these calculations show how salaries, if they've been reduced more than 25%, and then they, as compared to what they were prior, forgiveness could be reduced. So I've got this little recap at the bottom is important to understand. We very quickly went from an amount I could borrow to what I actually spent to what I actually ended up being forgiven. So you'll need to run these sorts of analyses to understand it better. Loan forgiveness is not automatic. You have to apply for it at the end of the 8-week program. You'll submit document to your bank. So this again goes to what I said, maintain records, try and keep it in a separate account so you can show very clearly how you're doing spending the money. And then the lender will have 60 days to decide how much is going to be forgiven. So this is why it's so important to try and run some of these programs. They're very attractive programs, but there are a lot of nuances about the calculations that you'll want to discuss with your CPA and understand. So I'll very quickly go over the application form. You know, I've broken it into a few stages. I've populated some basic information here. You can see this is where you would put your payroll, and you see the form asks you to multiply by 2.5, then added in any previous loan you may have had, take out any of that $10,000 advance. I end up with 12,500, put your 2 employees in, or number of employees, that's where that goes. Identify the purpose of the loan. It says select more than one, so select all the relevant ones. Payroll, lease. You want to show you need it because you need it for these various reasons. Also important to know, if you have multiple owners of a business, anyone owning more than 20% has to be listed. There are a number of questions, so review these and check the appropriate box, sometimes initialing, because if you answer the question incorrectly, as the form indicates, you will not be approved. So carefully read the information on the form. There is certification at the end of the form. This is a self-certifying process. So you'll want to make sure that as part of these certifications, you really are eligible for applying for the loan. That's what these certifications are. It's also important that you accurately and truthfully respond, because there are penalties. You are initially to say that you accept that you could be civilly liable for fraud if you lie on your application, if you start to make numbers up. So really think about it. You could be criminally liable. So there are some serious consequences for not truthfully complying with this. But now you will also see in the Act, it didn't say how you needed to use the money under PPP or what percentage for the various purposes. But you see the application now cleared up. Only 25%, no more than 25% of your PPP loan can be used for the forgiveness portion if you want to be forgiven. 75% therefore must be used for payroll, which makes sense. This is, again, Paycheck protection program, and it is intended to keep people employed. As I said, there are additional benefits of the PPP program. There will be no fees, so there is a waiver of any fee when you apply for it. Credit elsewhere. You don't need to have shown, whilst SBA is usually a lender of last resort, you don't need to show that you've tried to apply for credit elsewhere and been rejected. And there is no personal guarantee required, because this is a sort of hybrid loan, but could be completely forgiven grant. So additional benefits, and they're covered there in the Act. We're going to deal with now some of the confusion, but before we do, I know again, we have a lot of questions related to the to what I've covered under PPP, so we'll do our best to answer some of those for you. So Kelly, do you want to ask them? I think you're still on mute. Or, yep, go for it.
I'll go ahead. I can go ahead.
Or anyone
Kelly's
time,
having some. Yeah, I'll go ahead. And I'm sorry, I haven't been able to aggregate them because I've been asking questions in the chat. There's a lot of questions. Kelly, can you hear now?
Yeah.
She can't hear. Okay, you're back on?
Shall I?
Yeah.
I can answer,
Okay.
I'm seeing some of them. Shall I answer a couple of the ones I'm seeing?
Yes, please do.
Yeah, so one question I see here is, can you pay the loan off early, or are you locked in? The beauty of these is there are no early repayment penalties. So you're not locked in for the period of time, which is why, for example, with PPP, people may find the amount they borrowed is not the same as what they eventually get forgiven. And they will probably be in the situation where they do not want to now carry a loan on their business when they're already suffering. So what you'll find is a lot of people will just say, thank you very much, SBA, take your money back. And that's why the term was also reduced by 2 years. So a good question about early prepayment. There. Sole proprietors, the question I see here, is the salary the draw, or how is it figured? So for sole proprietors and independent contractors, the calculation is much simpler than it is for businesses, thankfully. You're really looking at your Schedule C. So you're looking at your net income to calculate your net income on your Schedule C to calculate what your average payroll is going to be for the purposes of the application, but it is capped at $100,000. So sole props and independent contractors, net income is what you will use, but it's capped at $100,000 over the year, which would mean about $8,330 a month. So there's a couple of questions there. We can see if there's any other questions that you have.
There's another question that came up.
Yeah.
That I think a few people will have. A lot of institutions are overwhelmed with requests for these loans. Can people apply to more than one institution for these loans, or are they only allowed to apply to one?
Right, great question. This is much like shopping for loans in the normal course of business. You can go, there's nothing preventing you from going around and speaking to multiple banks or brokers and lenders to see where you can finally get in. But what I would advise you to do is tell those lenders before they process anything to check in with you, because the moment you get in the door with a lender, you want to let the others know that they don't need to worry about you anymore. It frees up resource for other people that are looking for loans. The other thing is you don't want them to run these checks because they may start to flag fraud alerts that one business is applying for multiple loans, right? And then that could cause a problem for you as well. So hopefully that answers that question. There was another question I saw here, which is someone talks about Bank of the West having guidelines on calculations and they didn't include premium. Here is a big problem, and you see this little joke I've made on the slide I have up. Banks have some latitude, but they've all been coming up with their own guidelines in terms of how they're calculating things. Calculators that banks have are supposed to include these benefits. Where they really only get latitude is about the kinds of documents that they should ask from you. So banks, it's going to be important to check and be mindful that banks are going to have different requirements for this. If it's okay, what I'd like to do is continue with the rest of the presentation, and then we will certainly jump to a lot of the questions that have been asked, that have been asked here. So let me again get rid of the Q&A chat.
Yeah.
So
and again, any
yeah.
questions that aren't answered in the meeting, in the live meeting, we will answer. We'll follow up via email. Thank you all for your patience and your interest.
Yeah. Thank you, and sorry I couldn't. I mean, we could do this for 3 hours, I know, with questions. So I really will do my best to cover as much as possible afterwards and make myself available when this ends. So yeah, the confusion. You've got this act, the guidance notes, and the bank, and so everything I've talked about from the language has been about under the act. But now we'll look at what the SBA did with respect to its guidance notes. Big confusion. How was payroll defined? Like I said, the Act almost made it feel like you could add independent contractors to your employee payroll costs. April 3rd, SBA came out to clear up the confusion. But here's what a great job they did in their confusion. Page 6 of their guidance note, their clarifying note. What do borrowers need to know? Page 6, question 2. You had to be in operation, well, we know that, and either had employees for whom you paid salary or paid independent contractors. So this clarification confused things even more. It said you paid employees or you paid contractors, but in the same guidance note, further down, what you saw is they clarified it and said at page 11, very clearly, unequivocally, independent contractors will not count as employees for the purpose of your PPP loan calculation. So you cannot include them. Why? Because they have the ability to apply on their own. So we don't want people to double dip it. You make your own application as an independent contractor or sole proprietor, separate to a business that has employees. We saw other confusion here in terms of even when you were going to have an interest rate. The Act permitted 4% interest on a PP loan. That's what the Act said. Then the Treasury came out April 2nd and said, we're actually going to cap the interest on this at 0.5%. And then literally a day later, the Treasury came back out again and said, well, in speaking with other lenders, 0.5% isn't really profitable for us. We can't survive on that. So it has been settled. The maximum interest, as I said at the beginning, contrary to what the Act says and previous guidance, the maximum interest on any part of the PPP, which is not forgiven, will be a 1% interest. Where did we get other confusion? The maturity date. The Act, as written, said the loan would be a 10-year loan, maximum 10 years. But that's been reduced, again, because of the low interest and the fact that a big portion should hopefully be forgiven. The maturity is set now in the guidance at 2 years. So it's a maximum 2-year loan, as I previously indicated. Time periods that you should be using for payroll costs. If you remember at the very beginning, I said that the Act indicated that payroll cost was either going to be based on February 15th, 2019 to June 30th, 2019, or you would look at Jan 1, 2020 to Feb 29, 2020, if you were not in business in the prior year during that period. That was clarified in the April 6th guidance, the FAQs that came from the SBA. And what they said is, and they've directed banks that, look, when you're trying to figure out what period you use, either use the 12 months prior to when the loan is originated, either the 12 months before, or you could just look at the average during 2019. So again, speak to your bank because they'll use one of these 12-month periods. For seasonal employers, they have different calculations. So if you're not certain, again, check with the bank, but I will provide that further down in the FAQs as well. We had that question I talked about earlier about payroll calculators and what banks are using. Here's an example of a payroll calculator that a bank has. And this is really interesting because as much as I've self-isolated and I've been at home and working from home, I had to go to the bank for an important issue to deal with. And I was talking to the lender, and the calculator they had showed one calculator, which you can see here shows payroll costs, but in that same calculator has this line reference to independent contractors and self-employed. Now, even though we know that they're not included in payroll costs, this is going to create confusion for bankers and other people who aren't following the guidance, aren't keeping up to date with the news. They should be, given it's changing so much, but don't be surprised if inadvertently the banker in his calculator has this number and thinks he can add it. It would really make everyone's life easier. And there was a great article in Forbes by Nitty on this. If SBA just gave 2 calculators to banks, one for businesses and the other for independent contractors. So unfortunately, we are seeing that sort of confusion. As I said, payroll costs under the Act excluded certain things, and especially these chapters under the Inland Revenue Code with regards to federal payroll taxes. And it was confusing because the covered period was in 2020, but the SBA guidance was related to taking payroll averages from 2019. Because of the confusion, you had the independent payroll providers like ADP. On April 3rd, I saw a calculation that they were doing. They were providing a service to their businesses where they'd run reports for payroll. They'd exclude a number of taxes, both employer and employee federal payroll taxes, and then say, use this as your average payroll that you could apply for. And that was confusing. So April 6th, the SBA had to clarify this as to what taxes, federal taxes, really would be excluded from calculating payroll. And what they got down to is this: the amount you pay your employee, the net amount, plus whatever taxes they withhold from the employee's pay, but they need to be paid on behalf of the employee. So the payroll taxes that the employee is required to pay but are withheld on their behalf, those would be included in the payroll calculation. But the employer's portion of the federal payroll tax would not be included. So ADP has already changed their system. So there's already been this issue that had to be clarified about what federal payroll taxes would or would not be included. And that was really unfortunate even now, because as a business that is already on its knees in terms of minimal revenue being generated, being encouraged to keep people employed, is now dealing with an issue. They've still got to make some sort of provision for covering payroll taxes. Now, there is additional relief under the CARES Act for employee retention credits and so on. But again, I'm not addressing those now. I will be sending regular updates, but you could also speak to your CPA as to how to deal with these payroll tax credits. But you should also know that some relief you take under other programs or tax benefits through the CARES Act may exclude your ability to apply for PPP. I apologize, it can be a little confusing with respect to that. So I would really say check with your CPA about what is and is not going to be included when they run the calculations for you for your payroll, and talk to your lender. So again, return of the EIDL. Is it an advance? Is it a grant? The Act is intended for this to be a grant. It is just confusing because the Act constantly refers to this at the same time as you're applying for an advance of a loan. So there was a strong rationale that even I held for a while, from a cautious perspective, that if you apply for EIDL, which is a loan, and then you apply for the advance on that loan, logic would tell you that that's still a loan. But the SBA and everyone has really tried to clarify that this is indeed going to be treated as a grant. So it's expected to be treated as a grant regardless. That is said with the caveat of, if you apply for this loan and then you get approved for an EIDL and you decide to turn around and say, I don't want the loan anymore, we don't know. Questions could be asked, and this is ever changing, so we'll need to keep an eye on it. But the assumption is it would still be a grant. So some key take-home points I want to have for you, because I'm going to run through practical examples. We've only got about 13 minutes left of this, Kelly and everyone, for you. I've only got a couple more slides. I'll finish those and then we'll bolt all the questions together, if that's okay for everyone. So thank you again for your patience on this. So now here's my take-home points for you as a borrower, as a lender, as a business advisor, as a professional, that I think is what you want to focus on and hopefully be cleared up. How are you going to calculate the maximum amount of your loan? There's a 5-step process to calculate it, which the SBA released. Step 1, take your payroll cost total. Remove from it any compensation in excess of $100,000. Or if you're a sole proper independent contractor, cap your net income at $100,000. So step 1, take your aggregate payroll, reduce any excess over $100,000, then calculate the average, so divide that number by 12. Then step 4, multiply it by 2.5. Then add in any amount of EIDL or disaster loan you may have received in advance. Add that back in, then remove that $10,000 advance or grant if you received it. That's the 5-step process. As I said, for independent contractors and sole props, Schedule C, your net income, that's what you're going to be focused on, capped at $100,000. Forgiveness, how to deal with it. When you get your max loan amount, there is a chance it's not entirely forgivable, so pay particular attention to the fact that you use that PPP loan 75% for payroll and no more than 25% for other uses. If you need to use more than 25% for other uses, then rely on EIDL because it's a much wider use there, okay? So I'll do some practical number hypotheticals to show you how this could work in practice. In example one, we're looking at a business, pretty straightforward, doesn't have any employees over 100,000, hasn't taken any grant. So step one, we take our made up numbers here, $250,000 of average payroll, 30,000 of healthcare benefits, $20,000 of state and local payroll taxes. Add that together, we're at 300,000. We're not deducting anything because this business has no employees over 100,000. Step three, divide that by 12. Then step four, multiply by 2.5. That gives you your loan amount. Step five, nothing to add in, nothing to deduct. They didn't do anything with EIDL. So there, your total loan, $62,500. In example two, we have a business which has got employees over $100,000 and has something to do with EIDL. In this instance, step one, $1.5 million is the payroll annually, $70,000 of payroll of healthcare benefits, and $60,000 for state and local taxes. Again, these are my made up numbers, for example. So the max payroll cost, $1.63 million. But this business happens to have 4 employees that earn $150,000 each. So 4 people make $50,000 more than what's permitted. So we have to take that 50,000, multiply by 4, it gives you 200,000. Deduct that from your max payroll cost. So you see 1.6 has now been reduced to about $1.4 million. Step 3, divide by 12 again. This gives you your average monthly payroll. Multiply that by 2.5, you're at about $300,000. But here, this business did have a prior disaster loan of about $40,000. They also were lucky enough to get their $10,000 grant. So they took off $10,000 there. So they add back in $30,000. So for this business with more than 100,000 employees and some EIDL and a grant, it's gone up to $327,000 is the revised loan amount there. Independent contractors and sole props, let's quickly do this one, nice and easy. Your net income on your Schedule C was $130,000. We already know it's capped at 100,000, take out 30,000. Divide it by 12, gives you your 8,000 figure, times by 2.5, $20,830 is your loan amount. Now, if you also had a disaster loan, because you could have been eligible for a disaster loan, and you received that, and then you deduct your $10,000 grant, let's say they had a $15,000, take off 10, there's only 5 left, your loan has been increased from 20,000 to 25,000. So much simpler calculation in that respect for independent contractors and sole proprietors. Remember, I can't stress this enough, supporting documents. Different banks are asking for different things, so be ready for it. Be prepared to have your payroll records from your third party or otherwise. Banks are asking for ultimate beneficial owner forms. They want to know who the true owners are so they can aggregate and see where else you're borrowing. They may ask for tax filings. They shouldn't. The Act does not require that, but some are asking for that verification. Asking for 1099 forms as independent contractors, or other bank records. If you can't provide some of your payroll supporting documentation, banks are going to work with you, and they'll want to look at maybe bank statements, P&Ls, and other documents to help you relieve that calculation. Like I said, track everything for forgiveness. You want to make sure that you can really track this because it will make your life a hell of a lot easier down the line when you apply for forgiveness to get a sense of it and not be questioned about whether you didn't use the funds properly or not. Speak to your lender. They're using different timelines for where they want you to get your payroll from, and they're asking for different things, as I mentioned. Point number 4, an interesting one. For example, us as a law firm and many others would have this. If you're a business or a partner in a business that has employees, it's clear for your payroll, you're going to just use employees. You can't add in your draw, okay? you'd only be using your employees for it. A little confusing because the Act did say similar compensation. So some CPAs and some tax professionals I've talked to have said, well, a partner draw could potentially fall under that, but it's not intended to be the case. And what we're really hearing from some of the leading tax experts I've spoken to is that if you're a partner in a business that has employees, for PPP, you'd apply for your employees only. As it relates to your draw as a partner in a business or an S-Corp distribution, you would probably fall under the rules in independent contractors and make your own separate application. Again, guidance hasn't come out on this. It's still changing. So just be wary of this and watch out for updates, which we'll do our best to send those to you after this webinar and in the future. Another thing that's happening, agents and brokers are allowed to put these applications together and to help people with loan applications. But people are asking us, they're approaching me, hey, can I pay you to put this application together for me? The guidance is very clear. Agents can't charge someone for putting the application together. They have to, any agent or approved lender has to get their fees from the actual SBA lender fees. So you can't charge a customer or client directly for the application, filling in the application. However, as a professional, you'll be given a lot of advice, talking about different programs, doing calculations for them and so on. Now, these are services you're providing. So it's envisaged that they fall outside of that prevention of charging a fee, but for just filling in the application, you can't charge your client for that. And I would urge you not to. There's a lot of self-certification here. And as professionals, you want to do your best to really, and why did we put this webinar on? We want to see our clients, we want to see you as borrowers, as businesses survive this very traumatic period that everyone is going through. So I would really encourage, as a professional advisor, as a friend, do what you can to help someone get the information, get the answers to the questions they need so they can navigate this very complex environment. They'll remember you for it. And if they survive this, which we hope many will, then they're going to be a client anyway. So take this opportunity where you can to really help people. That's what we've tried to do. That's why we wanted this to be a free webinar, which was open to everyone in light of this. So I know there was a lot of info that we covered. I hope from the key points and the points to remember, focus on those as things to guide you moving forward. Thank you for your time. That's the end of the slides. We're at 58 minutes. We're bang on 2 o'clock. I will take questions for anyone that wants to stick around. I know there are a lot of questions. So to the extent I can, I certainly will answer those questions. So over to you, Kelly, and thank you everyone for your time.
So yes, we are taking down all of your questions. So if we don't get to them, we'll just send out written responses later. And of course, the PowerPoint deck, I've seen this question a lot. The PowerPoint deck will be emailed to you after today's webinar. And a recorded version will be up on our YouTube channel by Monday. But just going to the questions, we have like 50. One of the questions is, does any amount of the 10,000 EIDL advance reduce what you can get forgiven under PPP? Yeah,
and there's also, it absolutely can. So I touched on it, but just to clarify, if you take the $10,000 advance and you then get your PPP, when you submit your forgiveness amount, once it's determined how much you're going to be forgiven, that forgiveness portion is going to be reduced by the $10,000 grant you got. That's one thing. Another point I want to add, $10,000 is not a lot of money, and there are a lot of people that are applying for this, more than what's allocated in the budget for the $10,000. The reason these payments are taking time is we are hearing that the $10,000 is not exactly what you get. They may even limit it to $1,000 per employee. So when you apply for the grant, if they determine you've only got 4 employees, you may only get $4,000. So the $10,000 is sort of the max, and they're trying to redefine it to make this open to more people. So there's just an added bit of information that you should be aware of.
There's also a lot of questions for bank recommendations. I don't know if you can answer that.
Gosh, very, very difficult. You know, lots of banks want to give their customers priority. So that's one challenge.
Mm-hmm.
Smaller regional banks are who I would probably look to for accepting non-existing clients, or use lending brokers. They've got access to a variety of banks that they could probably get you in with. So that's what I would suggest. We are going to provide additional information to you beyond just this deck. There is a link, for example, to some articles and websites that are tracking every single bank and which ones are and are not accepting. So hopefully that will answer that question after the fact as well.
Yeah, there's a lot of questions about how to fill out the forms, and maybe we'll want to take that for later.
Yeah, actually, sorry, I do want to add one other thing. Again, going back to the banks, the money is already running out very quickly. So the government is trying to, and we will likely see further infusion of capital and stimulus to deal with PPP. There's $350 billion for PPP, 10 billion for EIDL. So where you might find, like with Wells, they opened their application last week on Saturday. By Sunday, they were at capacity, but on Tuesday, they open it again. The government is releasing more money. So constantly check back with your lender as well, because where they may close their application today, you may feel you're too late. They're also reopening it again. So that's just another point I want to add. Sorry, Kelly.
No. We just have a really good question here. It's like,
sorry,
the questions are coming in, so
yeah.
One of the questions is, I understand there is an error in the Act in the formula for determining forgiveness of PPP. Is that a correct statement? And if yes, has the error been corrected or addressed?
Yes, yeah. So as it related to the forgiveness portion, there was an error, and I will send the guidance note afterwards on this, which corrects some of the error related to the forgiveness, and they in fact had clarified that as well.
Okay, another question here. You mentioned that sole proprietor can use net income on Schedule C to calculate the loan. I only see gross income and net profit on Schedule C.
Yeah, so
there is no net. Yeah.
Yeah, you'd speak to your CPA about this. You're taking that. It's because the Act and the guidance wants you to use net income. You'll look at this gross income figure, but what's going to happen is when you talk to your bank and go through the process, they'll start netting some things out from that and look at this sort of balance between your net profit and your gross income. So you'll start with a gross income figure, but if we talk about net income, because they will take certain things out, banks are using a reasonableness test when they're filling these forms in and doing these calculators for you. So they're looking at what you have and what you think you might want or need, and they'll test the reasonableness of it. That should it really be related to that gross income Schedule C line, or should it be less some deductions, which their calculator that the bank has gives them the net income figure. So it's a great question. I think Dennis or someone asked that question. Yeah, carry on.
Well, after today's webinar, a lot of people have learned a lot of things. So what if you've already submitted your application and you realize that you've calculated your payroll incorrectly or whatnot? Like how would you fix that? Or do you go directly to your bank to get it corrected?
Well, you have to remember, if you have done your calculation, well, let's differentiate the two programs. Many people may have done the EIDL portion, but with the PPP portion, you may have filled in your application and submitted it. It's unlikely you've been already approved. Bankers are going through a checklist. They've been given a checklist to make sure all the criteria are met. And as I talked about that reasonable test, expect your bankers to come back to you with some questions. If you think your calculation is wrong, go back to your bank and let them know, hey, by the way, I think there needs to be some clarification on this because I didn't realize such and such. Everyone knows this is a very, very fluid, very fluid process at the moment, unfortunately. So bankers are still kind of learning the rules and getting to grips with these calculations.
And so I wanted some clarification on this. Like if you own your own company, but you have a spouse that does assist you, but they did not have a payroll in February, you cannot include them in your PPP loan. Is that correct?
Correct, because either they're an employee, so they're a true W-2,
yeah.
and you can include them, or they're not, which means you're probably paying them on some sort of hourly basis. You're issuing that person a 1099, and if you're doing that, then they've got to apply themselves. And as I said, sole props and independent contractors only have, well, their ability to apply was today.
Just going, there's a lot of questions on.
I've got one I saw here.
Yeah,
I've got one more I saw here. Jonathan, I just posted that. Can I charge a fee for providing a service or calculations, for assisting with the application based upon a percentage of the amount received for the client, not charging for filling out the form? Jonathan, I'm not sure if you're an attorney or if you're a CPA, but there are a couple of things to think about here. I said that filling out the application, yes, you can't, and you can't charge for just filling the form in, and you've clarified that in your question. Could you charge a fee for helping them with wider advisory services? Yes, you could. As an attorney, to charge a fee as a percentage of what they get, we start to fall into a lot of ethical issues here about, is the fee you're collecting reasonable in proportion to the amount that the client receives? So I'd be very careful about that. So I'm speaking again to attorneys. Jonathan, I'm not sure which one you are, but I hope that partially answers the question there. I saw another question. Sorry, Kelly, I've kind of taken over to like address a few of these to help you out because there's so many.
Yeah.
I saw a question here. If you opened your business in 2020, how will your calculations be done outside of just the time period set forth? So if you open your business in 2020, under PPP, you need to have been in operation prior to February 15th, 2020. And then equally for the payroll calculation, as I said, if you can't work on 2019 figures, you'd be looking at this January 1st to February 29th calculation, or your lender is going to look at the months prior to your origination of that loan. So the key is you had to at least have been operating if you were a new business before Feb 15th. Apply there. S Corp. Okay, here's a question I know we get a lot of, especially from professionals. I saw Liana, a question here, S Corp with an employee. I've myself not been taking a salary or a distribution. Can I add myself now? But if you haven't filed your taxes, potentially, yes, I would speak to your CPA, but I think you've probably got a bigger issue beyond that. As an S Corp, you've got self-employment tax issues. So you are supposed to have taken a salary because of the self-employment taxes. So I think you have a wider issue you might need to consider there. So speak to your CPA about, can there be some sort of adjustment based off of that if it's not been taken thus far. So it's something to deal with. I'm also mindful of the time. We're kind of gone about 10 minutes over almost. Maybe we've got time for a couple of more questions. I appreciate that there are a lot of questions, but I will, again, try to answer these afterwards in writing. So we don't want to feel you're not getting your answers or they are forgotten. Any specific question that Kelly wanted answered, or should we perhaps address these afterwards?
Let's do one more.
Okay, go for it.
If you are a partnership with 2 lawyers and no additional employees, I am assuming you qualify, but they would like clarification on that.
Yes, you would qualify, but you see, you don't have employees, so you couldn't have applied technically last week. So you, as the 2 partners, will make your own, as we understand, you would make your own separate applications, not for the firm now, but for based off of your draws that you're receiving as the independent partners in your partnership. Again, we will see what happens with this. You know, it took many days after the Act rolled out for guidance to be issued, even after April 3rd, guidance after April 3rd for businesses. I expect for people like that question we just had, for partners, sole props, independent contractors, even though the application is available today, I imagine we'll get more clarity as this continues to evolve.